Today, Bitcoin pulls back from last week's $100,000 milestone. And Andy Baehr of CoinDesk Indices breaks down whether the whirlwind of pro-crypto headlines from the Trump transition team will drive lasting support for crypto markets. By noon Eastern, Bitcoin dipped 2% to $97,800. Ether fell 3.5% to $3,844, and XRP dropped more than 6.5%. Altcoins suffering steeper losses today after benefiting the most from the Trump 2.0 trade over the past month. The move in XRP also follows Ripple CEO Brad Garlinghouse's feature on CBS's 60 Minutes last night. He discussed the industry's massive political contributions in the 2024 election, as well as the current regulatory landscape. Garlinghouse took to X to express disappointment in some aspects of the segment, specifically omitting sound bites from the interview about the landmark 2023 ruling that XRP is not a security when sold to retail investors on exchanges. XRP has rallied more than 330% in the past month, and last week flipped Solana to become the third largest cryptocurrency by market cap. All right, let's stick with markets as we jump to our main story. Of course, everyone's been keeping an eye on Bitcoin as it hovers right around that key $100,000 mark, but we're also keeping a close eye on the Trump transition team and some of the major pro-crypto staffing picks the president-elect has been making. Crypto World's Jordan Smith spoke with Andy Baehr, head of product at CoinDesk Indices, about the role politics continues to play in crypto markets and how the CoinDesk 20 Index, an index measuring broader crypto market performance, could fare through the end of 2024.
All right, Andy, let's just start with the markets overall. Obviously, that huge milestone for Bitcoin last week had everybody talking. And regardless of the pullback today, I've had all kinds of people over the weekend asking me about that 100K Bitcoin, sort of how far it extends into other cryptocurrencies. And I think you're a good person to ask that too, because of the CoinDesk 20 index. Based on that index, what are you seeing out there? How deep does this rally go? What's the momentum looking like in the crypto market?
It's despite Bitcoin's kind of champagne moment last week of hitting 100,000, which of course a lot of folks celebrated. The CoinDesk 20 index has outperformed Bitcoin since the day before election. It almost doubled during the month of November since the election, and that says a couple of things. First of all, Bitcoin is enjoying a lot of adoption momentum right now. More and more people are using it. Every time MicroStrategy comes up, every time this idea that corporate balance sheets might hold Bitcoin as an alternative source of store of value comes up, this is all part of adoption momentum. Bitcoin probably has the least to gain from any regulatory changes. It's very well regulated already. It's classified as a commodity in the United States. We have futures contracts, options on futures, ETFs, options on ETFs, options on ETF indices, wide availability on centralized exchanges. So Bitcoin's story, and when it really comes down to what Bitcoin is fundamentally, is about more people being able to own it, understand its value proposition. And so that adoption momentum is key. Several of the president-elect's comments, whether he is appointing the crypto czar or just talking broadly about what his administration is going to be like, are clearly pro-crypto and pro-Bitcoin. That helps. So Bitcoin's done great. CoinDesk 20 almost doubled. You saw a resurgence in names like Ether and Ethereum, mainly because there is more future for things trading on Ethereum, which would bring up volumes and help Ethereum out. Stable coins, part of the meme coin market, NFTs, but also smart contracts. The innovation and the growth side of crypto is either going to trade or clear on Ethereum, and that kind of woke up Ethereum after it having a pretty sleepy kind of summer. The rest of the CoinDesk 20 names, which are the top names in crypto, experienced what were almost surprising resurgences. XRP, XLM, Uniswap, Cardano, Hedera, just all the way through the list. All the names were up, some of them multiple times. As things stood by the end of November, more than half of the CoinDesk 20 names had doubled or better during the year. So those are so separating those two is important. Bitcoin is about adoption momentum. The outlook, the better outlook for a regulatory pavement on which the digital asset industry can operate is really what about the other coins momentum is about.
Something I've been wrestling with is just how much U.S. politics has played a role in this latest rally, because I feel like for years we've been talking about here on Crypto World that crypto is apolitical, it's global, no one country can have an outsized influence on the industry or markets. It seems like that's less true than ever. Am I wrong on that? Is that a good thing or bad thing? Help me make sense of that feeling that I'm feeling right now.
Right. It's great when you go around the world and you look at different jurisdictions and you meet with regulators. I've met with regulators in Hong Kong, met with regulators in Dubai and in Europe. They have dedicated digital asset regulations, which you kind of need as an industry grows up and you want to operate in a place where the talent lives and where the capital lives. You need rules for capital formation. You need rules that help you define what your business is going to be and how it's going to be regulated. We are always saying crypto wants better regulation, not no regulation. So an apolitical stance is fine so long as the rules are clear. Crypto will have to, like any other asset class, sustain both Republican and Democratic administrations into the future. But, I'm almost looking at this as crypto's 1933 moment, right? When the Securities Act passed in 1933, it established exactly what securities were and what they weren't. It provided clarity. It was landmark. And it basically began the capital markets, the equity parts of capital markets and their interaction with the public. And that was very good. At the time, it may not have felt excellent, but now it feels foundational, and we still refer to those rules every day. So having good, crisp regulations that are neutral to the industry, that are fair and usable is critical. That's been part of what's been suppressed over the last couple of years, and that's what the industry has really felt. That's the environment that we appear to be exiting from, and that's why the spirit seems to be a little bit more constructive.
How long do you see U.S. politics still influencing the market at the level that we're seeing right now? Because we still have to get a lot of these names confirmed. We still have to see what kind of bills make it through committee onto a floor vote. There are just so many questions right now. So is this our life for the next 2 to 4 years? That we're going to be watching politics and looking at price moves and saying, all right, what's happening on Washington to drive that price move?
Well, I think there are going to be moments of elation like we've had over the last month, and there are going to be moments, maybe even seasons of frustration. So we can't assume that we're going to keep rocketing off. I think even if you look at the markets over the weekend and today, they've softened a little bit. We've had an incredible run for a month as the market repriced in this new future. You're exactly right that legislation will take a long time. Stopping the bleeding and I guess having some existing projects kind of come out of hiding for maybe reduced fear of actions coming in their email unexpectedly, that will probably help. That's probably the best short-term thing. Again, for Bitcoin, all you need is mentions and comfort. There were still some editorials in various publications after the 100,000 mark saying, well, we told you so then and we're telling you so now, stay away from this thing. So as long as there are naysayers and side-eye and eye-rolling, that there's more adoption momentum ahead. For the other digital asset classes, I think the thing to watch is going to be how much talent is coming back onshore to the United States. That's key. How much capital is going to be reinvested into projects in the United States? And how soon will we have more kind of investment opportunities for retail investors who don't want to trade on crypto native exchanges? In other words, if I want something in an IRA that has diversification or in an ETF form or a fund form that's easy to purchase, how soon am I going to be able to get that? Because what's most important is that most 5%ers, most people who are spending 5% of their time allocating to digital assets are not going to pick tokens, and they're not going to pick timing. They deserve something like the QQQ of crypto to help get them exposed to the market, but not necessarily devoted so much that they have to try to pick individual winners.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.